Hello, professionals. My name is Rico Aladdin, and I'm the founder of Professional Lounge. Today, we'll be talking about taxes, the do's and don'ts of taxes. So, how you can maximize your refund with a CPA. So glad to have you in the studio, Trey. How are you?
I'm doing well. How are you?
I'm doing good. I'm doing good. Thank you for being here today. So, before we start the conversation about taxes with Trey here, I have a quick message for you. Professional Lunch is a nonprofit organization, and we rely on guests, on friends, on partners to keep our operation going. So, I want to be your friend because we have great friends who support us, and hopefully, if you know what we do, you will support us too. So, we thank you. Now, on to the conversation. Trey, this is your first time on the Professional Lounge podcast. Please tell the Professional Lounge audience a little bit about yourself.
Yeah, for sure. I'm actually from Miami, Florida. So I came up here in 2018. I went to school at Mayville State University, located in Mayville, North Dakota. Graduated with an accounting and business administration degree. I started out as a nursing major, actually, and
Wow.
changed majors to accounting after taking one accounting class, and I fell in love with it. I was a vice president of DECA for accounting and competed nationally for accounting competitions and placed in second. So I moved to Fargo in 2021. I started working for Titan Machinery and did financial consulting and auditing there, and got my CPA license just over a year and a half ago, and have continued to get other credentials for accounting.
Wonderful. You said you changed your major from nursing to accounting. So what that on? Why did you do that?
Yeah, so as I was in class one day, I took one accounting class because it was a requirement for my general education credits,
Okay.
and the numbers just spoke to me. They made sense. The language, the processes of how accounting works, it just made sense to me. And then my accounting professor brought me under his wing, and I never looked back.
Wonderful. Is taxes your specialty?
Yes,
Okay.
yes.
Wonderful. So we're glad you're here today to talk about the do's and don'ts of taxes. So general tax do and do's and don'ts. What are some of the biggest mistakes that individuals make when filing their taxes?
Yep. Some of the biggest mistakes that people make is not understanding the tax code and how it affects them in their personal situation. Anything from not understanding that when you get a dividend, that's a taxable event that you have to record. People and to explain what a dividend is, that's something people are familiar with the concept of, but not actually what it is.
Mm-hmm.
So a dividend is actually just a payment from a company regarding a stock that you've purchased if they have positive net income at the end of the year.
Mm-hmm. Okay. So is that the only mistake they make?
Nope.
Okay.
Nope. There's tons of mistakes that people make. Common one is people forget some of the credits that are available for their taxable situation. They don't know what they don't know. So I typically offer all the information, and that's where you get some value out of speaking with the CPA. Is you get the opportunity to look at your whole situation and see what money we can save you, essentially.
Okay. So, what are some of the common tax deductions that and credits that people often overlook?
Yep. So a big one. I have a lot of clients that are they are Uber rideshare providers.
Mm-hmm.
So they drive Uber and they forget to track their mileage for the year, and then they get a 1099 at the end of the year, and they're, hey, why is my self employment so high, and why am I paying so much in taxes this year? It's because you didn't record any of the expenses that you had during the year. So that's where we step in and say, hey, you need to record that, estimate how many miles you've driven for the year, and then you can take deductions against that and see if we can get you to a taxable bracket that you're actually going to get money back. So,
Mm-hmm. So, what is the best way? I mean, what's the easiest way to organize your financial records to make tax filing easier?
yep. So I like to say that you during the year should have a a process where every tax document that you receive during the year you put away into a certain folder, because people have actions in January that affect next April when tax season is around. So it's easy to forget documents and to forget what you've done during the year. anything from purchasing a home, anything like taking out student loans. All of those are taxable situations that could save you money at the end of the year.
Okay. So, how can someone know whether they should file their own taxes or hire someone to do it for a professional?
Yep. So one of the main indicators that you need to talk to a tax professional is when you have more than just a W-2 and you have interest income, because you're going to get charged if you go through even TurboTax or Intuit. Those services are nice for if you have just a couple of W-2s that are automatically uploaded, but when you have to type things in manually, that's where you can shift some of the risk to the prepared CPAs. So,
Okay. So, what is the difference between a tax credit and a tax deduction, and does it matter?
yep. So that's a very good question. Tax credits actually they can be something that's refundable. A tax deduction is just offsetting your taxable liability. So let's say if you're a business owner and you have meals that you had throughout the year for you to eat for your business that were necessary for the business, then you can take a deduction for it, and that will in turn reduce what's called your taxable income, and then that's what you get taxed on. But a credit actually reduces your taxable liability outright. So let's say you owe $2,500 in a tax liability at the end of the year, then you have a $500 credit, then that offsets it immediately to make your taxable liability to $2,000.
Wonderful, wonderful. So, what would be the risk of waiting until the last minute to file your taxes?
Yep. So there's a lot of risk associated with waiting until the last minute to file your tax return. Waiting until the last minute, there's always, you might not have all of the forms that you need. You might not be able to get in contact with the tax preparer if your situation's difficult. Around this time of year, we actually do a bunch of extensions, so that pushes out the deadline until October. But you need a tax preparer to do that. So
Wonderful, wonderful. If someone owes taxes but can't afford to pay right away,
Yep.
what are some of the options that they have available?
Yep. So with that, the IRS has a payment program.
Okay.
So there's the option to mitigate that by making minimum payments towards it. The IRS cares more that you're current with your tax liability than if you don't have the money to pay for it. Then they just want you to, at least show some effort that you're gonna pay that tax liability at some point.
Wonderful. So, if what should people do if they get a letter from the IRS, whatever the reason might be?
Yep. So this is not an ad, but contact a CPA. Contact someone that the IRS makes mistakes, and that's a common misconception with individuals is they think that when the IRS says something, it's law. One of the reasons you deal with the CPA is that they have the legal right to argue against anything that comes from the IRS.
Oh, I didn't know that.
Yep.
So, what can they argue? Give me an example.
Yep. So let's say the IRS calculates taxable liability of $10,000. I can look at the tax return, say this is why we justified this position when we're taking a deduction, and then we can get that reduced. So we can argue against how much the individual actually owes.
Wonderful, wonderful. So, so what are some of the red flags that that could trigger an IRS letter or an IRS audit?
So some of the red flags that we see common is people come up with very creative ways to create deductions. And the IRS tax code has been pretty stable for the last 20 years. So it's something that's understood, and there's a reason that it exists. It's pretty stable. If it changes, it's something minor over the years. We have the Tax Cuts and Jobs Act. So that got enacted in 2018, which made some pretty big significant changes to the tax code, but that's not something that's pretty common. So when you see people come up with all of these, can I write off my dog? Can you write off haircuts, and you're not in a professional setting where you're presenting yourself, then those are not ordinary and necessary expenses. And when you start to see those things on a tax return, that's when the IRS can flag your return.
Okay, so the next part of the conversation, we're gonna switch it to college students and young professionals who are launching their careers. Um, so, what tax benefits are available for college students and recent graduates?
Yep. So the IRS is actually giving a lot of incentives to college students to get their tax returns completed. So as a student, you have the 1098T, which is your tuition that you pay to the university,
Hmm.
whether that's through a loan or if your personal funds are coming out for that. All of those necessary expenses, books, supplies, room and board is not included in that. But if you have any of those expenses, then you can get uh, you're usually not having a high earned income when you're in college.
Hmm.
So it's more of a refund that you'll be receiving if you do file a tax return with your documents.
What else?
Um, Another situation that we see common for college students is they get claimed by their parents instead of doing their own. In some cases, it's actually a better situation for them to claim their income themselves because they'll get a bigger tax return
Okay.
versus the $500 credit that their parents will get.
Oh,
So
I was just about. I was gonna say, should they file or should their parents file it? Because what's the legal age that their parent can file for them? Is it? Isn't that 18?
nope,
Uh, uh,
nope. So if you're in college full time, it's up until 24.
oh, up until
Yep,
24. I did not know that.
yep,
Yeah. So, can college students deduct, student loan interest? And
yep.
if so, how much?
Yep. So they're allowed to deduct student loan interest. I'm not exactly sure of the exact number that comes off,
Hmm.
but there is an incentive for them to deduct student loan interest if they're paying on it early. So
Do you get contacted by students to get to take care of their taxes?
yep,
Okay.
yep, all of
Okay.
the time. That's a big college base that we get because we give discounts to clients that are in college. So
Okay. Wonderful. So, if a student works multiple part-time jobs, how should they handle their withholding?
if they're working multiple jobs, you have to do what's called an estimate for multiple jobs on a W 4.
Okay.
A W 4 is a form that you fill out with your employer at the beginning of your employment. A lot of people make the mistake of not updating that as things change for them. So if
Okay.
you work the position for 3 months and you made $6,000, and then you work another position and you make $20,000,
Hmm.
well, your withholding is only going to be for whatever income you made with that second company. So it'll show on your W 4 20 grand, and it's not including that other 3 grand that you made at the beginning of the year.
Mm.
So you need to go through, and this is where having a paid tax preparer is nice because we can answer those questions for you,
Okay.
and go over how multiple jobs affect your withholding.
Wonderful. And what should young professionals do to maximize their tax refunds?
Yep. So, in order to maximize your tax refunds, a couple of things. You need to ensure that if you have itemized deductions, if you have a ton of medical expenses that happen in a year, to make sure that you get in contact with someone and keep all of those receipts because those will affect the standard deduction that you can take. So, you can either take the standard or you can take itemized if you have student loan interest and you have um, low income, but you had a bunch of medical expenses or anything that occurred during the year, then you can take the itemized, which will then increase how much you can deduct off of your earned income.
Okay, so you mentioned standardized or itemized. Which one, in your view, is the best one?
Yep. So standardized keeps things simple.
Okay.
You don't have to record anything or keep any receipts.
Okay.
Standardized is pretty much 90% of anyone that's in college.
Mm-hmm.
So I personally recommend that any college students, if they want to save money doing their own taxes, to do the standard deduction.
Mm. You mentioned Uber earlier, so that was part of my question. So, how can side hustles like Uber, DoorDash, freelance work, impact a student's tax return?
Yep. So if they're working side hustles, they're usually issued a 1099 if it's over $600,
Mm-hmm.
which then needs to be reported. And once it gets reported, that income has not had any taxes taken out against it, in most cases. So with that, people get their Uber income, and then they, at the end of the year, get hit with a pretty significant bill because they didn't pay any tax on it, and you have self-employment tax as well. So that's where it's important to get in contact with the tax preparer to say, hey, what deductions can I take for this? If you have a small business and you're a small business owner and you don't have that much income, you can take the home office deduction. You can take the mileage deduction. There's tons of deductions that you can take against it to offset that income that you're making and make it on paper look like you didn't make anything.
Okay. So what is the best way for students to save on taxes if they are paying for tuition and school expenses?
Yep. So you'll get what's issued a 1098T, which is basically going over all of your qualified education expenses. And then once you have that document, a lot of students forget it. And then they just file their tax return and get the W-2 withholding refunded to them. But that 1098T is a very important document. If you get it in the mail, make sure you include that on your tax return because it will increase your refunds.
Wonderful, wonderful. Now you get the main part of the conversation here. We have Trey here. Tray Brownlee is a CPA talking about your taxes, how you can maximize your efforts to get the most funding possible. And before we go to the next part of the conversation, which is talking about best practices for small businesses, I want to remind everyone who's listening to this podcast that we are a nonprofit organization. We heavily rely on guests, friends, and partners to keep our podcast going, our operation going. And so when you support us, you don't just support the podcast, you support the development of a mentoring platform that help connect college students with experienced mentors to help them launch their careers. So we thank you so much for your support. Now, another part of the conversation is best practices for small businesses. What are some of the most important tax deductions that small business owners should take advantage of?
Yep. So one of the most important and most tax advantaged things that a business owner can do is take depreciation. So if they have any assets, and an asset is classified as anything over $1,000 that they purchase in a year for their business, you can depreciate that and then take it over time. So depreciation is just taking a percentage of the cost of how much something costs and estimating how much useful life you'll have of it. So,
for example, let's use a computer, for example. If you buy a computer for $1,500 at the end of the year, how do you go about depreciation?
Yep. So a computer is classified as a 5-year asset. So if it's over $1,000, if it's under $1,000, you can actually expense it in the year that it's incurred. So let's say you buy a computer for $700 and you say, hey, can I expense this against my income for the year? Like I made $10,000, but I spent $700 on a computer. You can write that off immediately. But once you get over $1,000, you have to depreciate it over time. And so how that works essentially is you'll take a computer is a 5-year life. You'll divide it by 5 years, and then you'll take, let's say, $200 each year as a deduction that you'll continue to have until it runs out of depreciation.
Okay. What other deduction that they can take?
Yep. So a big one for small business owners, a lot of people, they do a lot of their paperwork or they work from home, and you can take what's called the home office deduction. And the home office deduction is essentially just a standardized deduction that you can take for up to 300 square feet of your home, and you write it off for a $5 amount per square foot, so it ends up being $1,500 of a deduction right there. So
wonderful. Can you think of another one or two maybe?
Yep. So any mileage, if you're a small business owner and you drive to go pick up supplies, if you go drive to drop items off to, if you're a online retailer, to UPS, you can take the mileage that you drove there and back and take the mileage deduction as well.
Okay, so how can the structure of a small business, say an LLC or an S corp or a sole proprietorship, affect taxes?
Yep. So an LLC is it's if you're a sole LLC owner, then it's a sole proprietorship. So an LLC is a legal standpoint, not a tax standpoint. So if you have an LLC, you can be classified as a partnership, you can be classified as an S corp, you can be classified as a disregarded entity, which is a sole proprietorship.
Mm-hmm.
But there is differences between those three. So there's if you're a sole proprietor, then you're likely filing a Schedule C, which is just a document that shows what your revenue was for the year, what your expenses were, but you pay self-employment tax on that, and self-employment tax is some of the highest tax that you can pay. So there's a trade-off between an S corp and a disregarded entity, a sole proprietorship. And once you get around to the point where you're netting out in net income around $40,000 a year, it actually makes more sense for you to become an S corp because you'll save on that self-employment tax throughout the year.
So wonderful.
Yeah.
Yeah. Anything else?
Yeah. There's tons of different forms that'll come if you do have a partnership where you decide that it's best for you to do that type of tax return. So there's all these different forms that I won't go into detail with to give you numbers,
Sure.
but all of the different forms have different tax structures, different benefits that have different benefits that are associated with each type of entity. So typically, if you can stay away from Schedule C income, if you're below the amount of making maybe $20,000, and then you'll want to stay as a sole proprietor typically. But once you get into the point where you're actually netting out a significant amount and paying a lot in self-employment tax, then you'll want to look at doing an S corp filing. And there's a lot of tax benefits to doing an S corp. So
wonderful. So what tax breaks are available for business owners who work from home besides the home office that you mentioned earlier?
Yep. So you can take a portion of your utilities. You can take a portion of your phone bill. Yep. You can take a portion of any of the repairs that you do in your home that you work on, if you can justify that it's a necessary business expense. So let's say you do a bathroom repair in your basement and your home office is in the basement, then you can take a portion of that repair and put it on your business return.
What would be a fair portion of that repair?
Yep. So it depends on how many hours you actually work on that business in that location.
For a full-time person, 8 hours a day.
Yep.
What would be a fair portion that IRS would then say, I don't think I believe this?
Yep. So when in doubt, you go 50%.
Okay.
So if there's a $6,000 bathroom repair, you'll take $3,000 against your business for repairs.
That's not too bad.
Yep.
That's not too bad. So how can small businesses legally reduce their tax liability?
Yep. So there's tons of different strategies that are associated with that. One of the main strategies is that you'll prepay for things you would have purchased in the next year at the end of the year, and just to get the expense on there for the year. So to put that in simpler terms, if you typically have supplies like paper towel that you purchase for your business, and that's a recurring thing, you can actually make that purchase in let's say 2024, so that you get the deduction in 2024, even though you're going to actually use the paper towel in 2025.
Oh, like ink, like paper, printing papers, and stuff
any
like
supplies.
that. Notepads, what have you.
Yep.
Wow. Really, really cool. What else? Is there anything else?
So in terms of tax saving strategies, it's one of those case by case situations for the business.
Okay.
So that's where it's kind of cool if you work with someone like me who's a CPA, that you'll get an opportunity to estimate what your tax liability will be and how we can reduce that or get it as close as possible to zero. So we like to stay between after all of the expenses throughout the year, between $0 and $10,000 is the sweet spot for people to have show income on their business. You can show income, but at the same time, you actually on paper are showing a loss.
Okay.
So one of the things I should have mentioned earlier is depreciation is a non-cash expense. So even though you spent $1,000 on a laptop, you're depreciating. You have that $1,000 that you spent, but you're depreciating it over time. So in 3 years, you'll still have a $200 deduction for that laptop, even though you didn't spend any money. So on the tax return, it'll show less income, even though from a cash standpoint, you didn't spend anything.
Hmm. That's. I'm glad you mentioned that because I'm pretty sure someone who have that going, they probably say have a light bulb moment.
Yep. Yep.
so, so this podcast is really about helping young professionals in their launch their careers, regardless of what the thing is. Like for instance, this is tax season, which is why I found you and bring you in to help them understand that. One of the questions that we ask often on this podcast is asking for advice for young professionals who are in college or just finished college. I have two-part questions. The first one is what advice, what your top advice for small business owners to avoid IRS penalties and stay compliant? And on the other side of that, and what advice do you have for young professionals who are in college or maybe just finished college, trying to find a job or working part time, what have you?
Yep. So to answer your first question
Mm-hmm.
regarding small businesses, one of the biggest things that I think will save a lot of small business owners some time and money is to keep good records of everything.
Mm-hmm.
So if you can think of any expense, if you can think of, hey, I had $1,000 that I paid in a year for my phone bill. Can I write that off against my business? It's better to have that information up front than it is to try to gather it right before
Mm-hmm.
tax time. So if you can get in contact with a tax preparer who will be able to, identify what can count as a business expense and what can't, and just provide him with all of the records, that'll save you tons of time and probably lower your taxable liability.
Mm-hmm.
So good record keeping, keeping track of all of the income that you receive, even if it's cash, because cash is not free and not tax free like a lot of people think.
Mm-hmm.
It's still income to you, and you need to report it. So
Okay.
that's the big takeaway I would say for
For
small
for
business owners.
small businesses, what about for how about college students who are listening to this? The young professionals, even if they are maybe this is their first year of college, they are they're not working. Maybe they have a part time job. Maybe they are volunteering. And so, what advice do you have for them when it comes to their taxes?
Yep. So if you're under the standard deduction for the year, if you're a college student, if you're just a part-time worker, if you're under the standard deduction, which for this year is 14,600 for someone that's single, file your tax return. Even if you don't think that you're gonna have a tax bill, there's a chance that you could get money back. So if you have the opportunity to file your tax return, even if you didn't make tons of money during the year, file it because you'll probably get your federal withholding back.
Mm, okay. What is how much money do you need to make to file your tax return?
Yep. So you have to make over the standard deduction.
What's
So
the standard deduction?
the standard deduction for someone single is 14,600.
So if you do anything below that, you don't have to file your
Nope.
tax. Okay.
Yep.
Um. Okay.
Yeah.
So if you don't file your tax, then this year or the year before, and then let's say 2024, 2025, you don't make that much money, and then in 2026 you happen to make money, to make like I don't know 20,000.
Yep.
Would the IRS ask about the previous years, or how would you put that on how would you, if there was an issue, let's say an audit or something,
Yep.
how would you justify that?
Yep. So the IRS is already aware of what you've made during the year.
Mm-hmm.
The job is for tax preparers is to make that match what the IRS's records show.
Okay.
So the IRS has the understanding that if you're under 14,600, that you don't have a requirement to file,
Mm-hmm.
and then there's no action that needs to be taken by you. But in the future, if you did have an audit, you can justify it by showing that your W-2s don't have over 14,600 in total income.
Mm-hmm.
So
Wonderful, wonderful. Well, professional launch is also about demand, the professionals that we have on there. So, tell us a little bit about, you that a coworker may not know.
Yep.
I understand you are a football player, a star in is it NDS? Yes,
Mayville State.
Mayfield State. Okay, okay. Yeah, tell us a little bit about that.
Yeah. Some things about me personally.
Yeah.
I'm a big bowler.
Okay.
So I during summer I will probably bowl every 2 days or so.
Wow.
Yep.
Okay.
So pretty big advocate for bowling. Super competitive. I played football. Went to a senior bowl in North Carolina.
Hmm.
Um, was pretty good. I not to give you the pity story of how I got injured and that ended my career, but I did get injured my senior year.
What happened?
I tore some stuff in my knee.
Oh,
So
okay.
yep.
Okay. Wonderful. So, you bowl? Are you part of a bowling team, or are you do you compete with friends and stuff?
Yep.
Okay.
Yep. So me and a bunch of guys from college, we all go
Hmm.
on the weekends and we try to do tricks and all types of fun stuff like that. So
Wonderful, wonderful. Well, Trey, you have some good stuff, man. You talk about some really good stuff here today. That a great piece of knowledge for businesses and also for young professionals. I'm so glad, happy with, and happy with what your input today for this podcast. And this is why we have the podcast, because we want to share some of the things that sometimes people may not be aware of, and especially for young professionals. And this, like I said, the focus is on young professionals, is to help them navigate those moments in their path. And your input today will really serve that purpose. Last word for the professional launch audience. Any last words for the professional launch audience?
yes. Um, I would like to communicate to any young professionals
Mhm.
that it is so important to network,
Okay.
so important to get involved in the community and meet people that may not benefit you in terms of your career, but meet great people that'll lead you and be lifelong friends. I can tell you there's countless stories that I have from just being in the community, being a parts of different grow groups and the church community, just speaking with people, and you meet more and more people that you'd never think you'd be involved with in your career, but they end up being your clients or,
Mm-hmm.
they'll be some of the first people to support your business. So,
Wonderful. Well, Trey, that's something that I live by, and I'm very big on networking. And thank you for mentioning that, because this is crucially important, especially when you're starting out. You don't know, uh, pretty much you don't know what you don't know, but you don't know a lot.
yep.
so, so well, I want to thank you for that. That is great, great, great advice. This is it for the podcast today. Um, Trey, thank you for being on Professional Launch today. Hopefully, this is not the last time. I would like to have you again. Make a habit of it every year that we have taxes coming and we talk to you, or if you have something else going on that you think the audience would benefit from, we would have to like to have you on it and share that. Thank you so much for being on the podcast today.
Yep. Thank you.
Wonderful, wonderful. Now, this is the part that I tell you. It's up to you to make today a great day. Have a great day.